Hi, I'm Rafia Hesson, Chief Investment Officer at Wipfli Financial, and today I wanted to share with you some highlights on market performance in the fourth quarter of 2021. Global stocks largely advanced in the fourth quarter to finish the year firmly ahead, despite economic uncertainty and market volatility spurred by the COVID-19 Omicron variant. Inflation and Federal Reserve monetary policy outlook remained front and center for investors during an eventful quarter. U.S. stocks overall were up 9.3%, international developed stocks were up 2.7%. A strengthening U.S. dollar relative to international currencies weighed on returns for U.S. investors in overseas markets. The only negative segment across global stocks were emerging markets, which were down 1.3% and continued to suffer due to the impact of China. Bond market returns were pretty flat for the fourth quarter. The U.S. Treasury yield curve flattened as 2-year Treasury yields rose 45 basis points, while 10-year Treasury yields remained unchanged from the end of the third quarter. Investment-grade U.S. bonds were just slightly positive for the quarter, while emerging market bonds were down 0.4%. On this next chart, we take a look at returns for the full year 2021 and get more granular in terms of specific segments within the stock and bond markets. The gray bars represent full year 2021 results and blue bars represent Q4 2021. A few things I'd like to call out. U.S. small cap value stocks were the top performing asset class with a return of 28.3% in 2021. Value beat growth by a wide margin within U.S. small caps. You can see small cap growth was up just 2.8% for the year. Within U.S. large caps, growth modestly beat value, as U.S. large cap growth was up 27.6%, while U.S. large cap value was up 25.2%. Among stocks, emerging market stocks were the only negative segment, both for the quarter and for the year, declining 2.5%. On the bond side, high-yield bonds posted the best performance in the fourth quarter, up 0.7%, and were the best performer for the year, gaining 4.6%. Municipal bonds were slightly positive for the quarter and were the only other bond segment with positive returns in 2021. Overall, it was a strong year for global stock returns and a flat to negative year for bonds as we saw yields go up after reaching historic lows in 2020. It's important to remember that these strong returns were achieved against a backdrop of seemingly constant worry regarding the emergence of new COVID variants from Delta in the summer to Omicron in the winter. As we start the new year, I encourage you to take market predictions by pundits and prognosticators with caution because no one has a crystal ball, and making drastic changes to a portfolio in response to market predictions can be very detrimental. Those are our highlights for the fourth quarter. As always, if you have any questions, please feel free to reach us at wipflifinancial.com. Thank you.